Now I'm joined by Steve Hare, the CFO, to talk through the numbers. Steve, how do you see this set of results?
Well, I think it's a really good set of results. I think 5% organic revenue growth, 27.5% operating margin is in line with where we expect it to be. And I think is a good milestone towards our FY15 targets of 6% revenue growth and 28% operating margin. I think also a highlight for me was the fact that we got recurring revenue growth of 7%.
There's been a move to subscription. Has that impacted the numbers?
Yeah, the subscription migration has really helped drive the growth. The thing with subscription is customers like it, particularly small businesses, because it gives them predictability of cash flow and avoids the need for them to pay a large sort of upfront license. And it's also good for Sage because we also get that predictable income, but also it changes the nature of the relationship with the customer. We have an ongoing relationship with them, which gives us an opportunity to talk to them about other services and features which we can sell them over time.
And how do you see cloud-based products driving growth?
Cloud really embraces everything we do. We Sage One, which is our SaaS-based product for small businesses, grew by 150% this year, which is a significant achievement. And on the other end of the scale, we have Sage ERP X3, which is our ERP product, which the cloud enables us to offer mobility for that product. And then in between, we have what we call core product modernization, which is where we've cloud-enabled all of or a lot of our traditional on-premise products, which allows our existing customers to have all the benefits of connected services and mobility.
What's your view of the current capital structure of the business?
Well, as you can imagine, as for all FTSE 100 companies, it's something that we discuss with the board from time to time. But we have a leverage target at the moment of 1, which means that our net debt is about the same as our EBITDA. And what that's allowed us to do this year is continue our progressive dividend policy, allowed us to do some share buybacks and also complete a couple of bolt-on acquisitions. So it's supported the current objectives, including maximising the value for shareholders.
And what message should investors take away from the dividend?
Well, we've increased the dividend by 7%, which I think is a healthy increase. And it's always been a feature of how we give our returns to investors, that we have a progressive dividend policy, and investors should assume that that's going to continue.
Are there any areas where you're unhappy or you're disappointed?
Yeah, there's always a couple of areas where you feel you could do better. I think whilst we're very happy with the way Sage One is progressing in the rest of the world, in North America, it's been slower to take off, where we're a little bit later to market and where we haven't yet launched Sage One Extra, which is the premium version of Sage One. And also mid-market in Europe, which is where we sell Sage ERP X3, where again we've had some slowness through the direct channel, but we're taking actions around that, and we're optimistic that that will return to stronger growth in the not too distant future.
But overall,
we're very satisfied. I think the FY14 was a very important milestone in terms of moving towards our targets of FY15, which is the 6% growth and the 28% margin, and I think this is a very significant milestone on that journey.
Steve Hare, thanks very much.